My name is Kamal Warren and I day trade the FTSE 100. But the interesting bit about this particular day is another chart pattern formed after the drop here, which is the rising wedge, as we call it.
So what's the rising wedge?
This is how it looks like, rising wedge. So effectively you're looking at a whatever that's called, a someone who speaks into, is it what is it called?
A funnel or a
Microphone.
Yeah, like a microphone or a loudspeaker tilted downwards. I don't know what, I think there's a different term for it. They use it in schools. Tilted downwards. So and you need 3 touch points at least, which is what we have here, top and the bottom trend line. And the break here is where you'd seek to go short. True enough, when the break happens, even if you held it on to the market close, you would have bagged a good amount of, a decent amount of profits.
So when the head and shoulders drops, why does the momentum then drop?
Well, it's because when the head and shoulders pattern formation takes place, it normally happens at the top of a chart pattern. You're expecting for the price to go down. So what you're looking for is a weakening in momentum. So it's not because the pattern formation is forming the momentum to weaken. It's just because of price action. So the momentum reading is what you're looking for to strengthen your understanding that the market is gearing up for a drop. So like I said, on a 5-minute chart pattern is just an additional indicator that you would use. But if I'm looking at this chart pattern here, when it's forming, I'll look at the left shoulder. The momentum reading is comparatively high to the right shoulder here. And when a break happens, it just continues sliding down the momentum reading as well, which indicates that there's weakening buying power. So it gives me more reason to go short.
On the 16th of April.
So as you can see, the opening there, and then price moves up, it turns and breaks down, and in that process here it forms what you would call a falling wedge as opposed to a rising wedge earlier.
A falling wedge?
Yes. So you've got more than three, at least 3 touch points there, and the break happens there. It closes outside the chart pattern there, or even if you were to take there. And if you don't look at any other time frame, the reason why I'm showing you this is because how you can effectively make a profitable trade just by looking at the 5-minute chart. You take you go long here, you buy the FTSE here, and your target profit is, if you forget all other indicators, you can take the Fibonacci from the highest for the day and the lowest for the day, which is the end of the chart pattern, and it goes without saying, it turns there. You would take profit, or even if you were to keep round numbers at 320, you would have at least bagged 10 points for that morning. And yeah, on this day nothing really special went on. There's possibly a break there. I mean, there isn't a chart pattern, but there's a very bearish, typical bearish signs that the market is going to turn, but I can't justify it other than just my experience knowing that normally happens, that the market would drop. But I can't sort of back that up with a chart pattern, because this really is not, I mean, you can call it, no, I mean, I can't even call it anything. It's not even a triangle. So, but there is a trade there. I probably would have shorted the market there and then rode it down up to closing point. I would have made maybe another 10, 15, 20 pips perhaps, at least 15, at least 15 pips. But I mean, I can't explain that. Besides, that is a classic sign of the market turning. Again, if you were to couple that with momentum indicators here, you can see the momentum is just taking a nosedive, and again it tries to punch through this. If you were to draw a support line there, because price always look for somewhere to reverse, it has taken before that the high for the day here it has used that resistance as the support here, and it has tried to punch below that line at least a few times, and the break finally happens there. It is a very, very bearish, well, I wouldn't say very, at least on a day trading basis, it's a bearish signal. You can write it down because also it is broke, broke below the support there, and you'd expect it to come at least all the way down here before reversing, which it did later on in the day.